All right, let's paint a picture. It's January 1st, 2026. You open up your accounts, and the number staring back at you is zero. No stocks, no bonds, maybe some debt that's kind of hanging around, and a job that's just, well, it's paying the bills. Meanwhile, all the headlines are just screaming about economic chaos. Now, most people would just freeze up right there, totally paralyzed. But what if that wasn't a bad thing? What if this was actually the perfect clean slate to start from?
Look, I get it. Starting from zero can feel like you are just hopelessly, impossibly behind. It's like everyone else got this massive head start and you're just now lacing up your shoes at the starting line. But what if I told you that there's a clear, almost mathematical path forward? A playbook that's literally designed for this exact moment.
Now, let's be super clear about something. This is not about getting rich by next week. It's actually the complete opposite. We are not hunting for some crypto moonshot. We're not trying to perfectly time the market. No. This is a reliable, you could almost say predictable strategy that's built on solid math and, just how our brains work. It's not a get-rich-quick scheme, it's the get-wealthy-for-sure plan.
So here's the game plan. First, we're going to talk about the invisible anchor that is actively pulling you underwater. Then, we're going to build your financial foundation, your fortress. After that, we'll lay out a surprisingly simple investment strategy, figure out how to shield it from taxes, and then, finally, we'll talk about how to pour gasoline on this whole system. This is the complete playbook, right here. Okay, step one. Before you even think about which stock to buy or what the S&P 500 is doing, we have to deal with the one thing that is absolutely guaranteed to be making you poorer every single day you let it exist.
And that thing is called the negative compounding trap. There's this really dangerous idea out there that you can somehow out-invest your bad debt. But seriously, trying to earn, say, 10% in the market while you're paying 24% on a credit card, it's like trying to fill a bucket that has a giant hole in the bottom. You can keep pouring water in, but it's never, ever going to fill up. The math is just fundamentally working against you.
And that math, oh man, it is absolutely brutal. Let's say you've got a $5,000 credit card balance at a 24% interest rate. If you just make the minimum payments on that thing, you're going to end up paying back over $9,000. But here's the crazy part. Paying off that debt is a guaranteed, tax-free, 24% return on your money. Tell me, where else on planet Earth can you find a guaranteed return like that? You can't. It is the single best investment you will ever make, period.
And what's really wild is that the cost goes so much deeper than just the numbers. Debt isn't just a financial problem, it's a psychological prison. It puts you in this scarcity mindset where you're always playing defense. You're too scared to ask for that raise. You're too scared to look for a new job because you are shackled to that monthly payment. Getting rid of it isn't just about the money, it's about unlocking your own potential.
So here's exactly how you do it. It's a system called the avalanche method. Simple. You list out all your debts, not by how big they are, but by their interest rate, highest to lowest. You pay the minimum on everything just to keep the lights on, and then you take every single extra dollar you can find and you just hammer that debt with the highest interest rate. Once it's gone, you take that entire payment you were making and you roll it like a snowball onto the next one in line. It's how you systematically crush your debt. Okay, the high interest debt is gone. You're back to zero. Now, before we even dream of investing a single dollar, we build a wall. We build a fortress. This is your insurance policy against life, which, as you know, is always going to throw you some inconvenient curveballs. Let me show you exactly why this is so important. Meet Investor A and Investor B. The market tanks, and they both lose their jobs. Now, Investor A, who is fully invested, has no choice but to sell their stocks at the absolute worst possible time, turning a temporary drop into a permanent, catastrophic loss. But Investor B? They just dip into their cash fortress to live on, leaving their investments completely untouched to recover when the market bounces back. That cash wasn't an investment, it was the insurance that protected their real investments. And that just perfectly shows you the psychological power of cash. An emergency fund gives you breathing room. It creates this little gap between a scary thing happening like a market crash and your gut reaction, which is almost always to panic and sell everything. So your first goal is simple, 3 months of essential living expenses. And you park that money in a high-yield savings account, which is really just a fancy way of saying a savings account that actually pays you a decent amount of interest while being totally safe and easy to access. All right, your debt is gone, your cash fortress is built, it is finally time to invest. And I'm going to let you in on a little secret. The fastest way to get rich in the stock market is to be as boring as humanly possible. You do not need to be a stock-picking genius. In fact, trying to be one is, statistically speaking, a really, really bad idea. I mean, just look at this.
Over a 15-year stretch, more than 90% of professional, highly paid fund managers, the experts, failed to beat a simple market average like the S&P 500. Now, if the pros can't do it, what on earth makes us think we can do it in our spare time?
The problem is, just buying the whole market, it's boring. It doesn't give you that little dopamine hit. Our brains want action, we want to feel smart, like we're outwitting everybody else, but you have to burn this into your mind. If your investing strategy feels exciting, you're not investing, you are gambling.
So how do we hack our own brains to do the right thing? We use something called the core satellite approach. Here's how it works. 90% of your investment money goes into your core. This is the boring stuff, low-cost, broad market index funds that just own a little piece of everything. The other 10%, that's your satellite. That's your fun money. You want to bet on a single stock? You want to buy some crypto? Go for it. But you do it in this little bucket. This lets you scratch that itch to speculate without ever risking your actual financial future.
All right, so picking the right investment, that's only half the battle. Where you actually hold those investments can literally be the difference between a comfortable retirement and a truly spectacular one. You can do everything else right, but if you ignore this part, you could lose a huge chunk of your wealth to taxes for no reason.
Just check this out. It's the exact same investment, same $10,000, same growth to $100,000, but the final result is wildly different because of one simple decision. In a normal brokerage account, you owe taxes on your profits, capital gains taxes, which in this case could be around $18,000. But in a Roth IRA, a special retirement account, that money grows and comes out completely tax-free. You keep the full 100 grand. That $18,000 difference had nothing to do with what you invested in, only where you invested it.
So the key is to follow this exact order of operations, what we call the tax waterfall. Step 1, put money into your company's 401k, but only enough to get the full employer match. That's free money, don't leave it on the table. Step 2, max out a Roth IRA for that amazing tax-free growth. Step 3, if you've got access to one, max out your health savings account, or HSA. Then go back and try to max out the rest of your 401k. Only after all of those tax-protected buckets are completely full do you even think about putting a penny into a regular taxable account.
Okay, so we've covered saving, we've covered investing, we've covered taxes. That's all defense. But there is one final lever to pull, and honestly, it's the most powerful one you have. It's time to stop just playing defense and start playing some offense.
You know, we're always told to get ahead financially by cutting back. Stop buying lattes, cancel your Netflix. And look, saving money is absolutely critical. It's the foundation of all of this. But it's a defensive game. It can stop you from losing. But to really, truly speed up your path to wealth, you gotta play offense. You have to increase your income.
This really says it all, doesn't it? There is a hard limit on how much you can cut your spending. You can only get so frugal. But there is absolutely no ceiling on how much you can earn. Your income is the fuel for this entire wealth-building machine. The more fuel you pour in, the faster you're gonna get where you wanna go.
So let's put it all together. Here it is, the exact 5-step playbook for starting from absolute zero. 1. Destroy your high-interest debt like it's your mortal enemy. 2. Build that 3-month cash fortress. 3. Automate your investments into boring, broad market index funds. 4. Use the tax waterfall to keep more of your money working for you. And 5. The great accelerator, go all in on increasing your primary income. You now have the complete strategy. It's not flashy, it's not exciting, but this is the plan that actually works. The math is on your side. The only thing left is for you to do it. So that just leaves one final question for you to answer, and it's probably the most important one. Forget about side hustles for a second and just ask yourself this. What is the one skill in your main career that if you truly mastered it would make you so valuable that you become undeniable? Your answer to that question, well, that's the key to speeding up this entire journey.